Good day and welcome to the Akola Group Investor Conference for the 3 months of financial year 2025-2026 performance. I'm Simona from Nasdaq Vilnius and I'll have the pleasure of moderating today's session. Thank you for taking time to join us today. Over the next hour, we'll provide you with a comprehensive insights into Akola Group financial performance and recent activities outlook. Before we begin, a few quick notes. This session is being recorded and will be made available on the Nasdaq Baltic YouTube channel shortly after we conclude. We encourage you to submit your questions using the Q&A function located at the bottom of your screen throughout the presentation. We'll address these during our dedicated Q&A session following the presentation. I'm delighted to introduce today's presenter, Mažvydas Šileika, the Deputy CEO for Finance and Investments, as well as the Management Board member of the company, who will walk you through the company's performance and answer your questions. Without further delay, I'll turn the floor over to Mažvydas. Please, the floor is yours.
Good morning, everyone. Simona, thank you very much for the introduction. Welcome everyone to the overview of activities and finance of Akola Group for the 3 months of financial year 25-26. I would like to always start with a disclaimer. Please keep in mind that the presentation can have forward-looking expressed statements, but they are only the best case of assumption of the management at this point. My name is Mažvydas and I will present today the developments through the 3 months of this financial year. So if we look at the structure of the group, it hasn't changed a lot since the end of the financial year. During the 3 first months, we still manage 59 subsidiaries. We have merged the 2 companies, but after the reporting period, we have deregistered another one. And we have bought a small company, which is basically a company who was owning 250 hectares of arable land, and we were previously renting that. So now we have that in our portfolio. But rather than that, the group structure is not expanding, and we are still merging and making it more efficient. If you would like to, I would like to go to our snapshot, how we look at the end of the first 3 months. So we managed to perform very well, and the EBITDA of the group stands at 36 million euros, and it's more than compared to last year when we had 27 million euros of EBITDA at the same quarter, and it's well above our 5-year average, which also stands at 27.6 million euros. I would like to really congratulate the group and our colleagues and our team. We had really a successful quarter. I would say really well balanced between our activities. With such a high EBITDA, we have a very good or even extraordinary EBIT margin. We managed to have almost 7%. Last year, we were close to 5%, and we are well above our strategic target, which is 3%. For sure, first quarter of the year doesn't imply the future, but we started really very well. That also gives us a fantastic return on capital employed, which is close to 12%, and that's first time after a long period of quarters when we are close to our strategic target of 12%. So those earnings and those EBITDAs gives us 40 cents per share on rolling 12-month basis, and with 40 cents per share, our price to earnings with latest pricing is just above 4 times. So the stock is fluctuating between 4 and 5 times in the past half a year. If I would like to present you then our balance sheet, it has increased year on year. The group's balance sheet now is above 1 billion euros, and the composition hasn't changed much, but both property, plant, and equipment has increased, as well as we have more current assets on our balance sheet, which is mainly, grains, which we hold on our balance sheet, having increased year on year. We still have quite a healthy borrowing base ratio of 63%. That means that we have quite a lot of equity in our system. And during the last quarter, around 133 million euros of readily marketable inventories were on our balance sheet. So our total liquidity position for this year is around 480 million euros. We did around 10 million euros in capex. We do not have new big projects going on now, so we are finishing few previously communicated. Our debt for the end year is close to 400 million, and 37% out of that is long term. So we are still very short-term debt-based company, which is partly covered by our readily marketable inventories. After a good last financial year, we have a solid equity position, which is close to 400 million euros, and that gives us a comfortable 35% equity ratio or capital ratio. And our 12 months rolling basis EBITDA is even 120 million euros. Then our net RMI adjusted debt is only just above 2x when our target is 4. So this is probably the best debt to EBITDA ratio we had for a long time. So let's drop down to our earnings. And for the first 3 months, we have close to 400 million in sales revenue. It is a successful quarter for us. The share between food and partners for farmers revenue remained very healthy, around 70 to 30%, and we have traded more volume. So in terms of volumes, we grew by 7.4% or 56,000 tons. Main contributor to this was our wheat trade. We had a big harvest in Lithuania, and we also have better positions in Latvia, which actually helped us to buy and trade bigger amounts of wheat. That also helped us to offset reductions in our other trades. We have lower feedstuff trades and, of course, lower input trades, which I will talk about later. In terms of revenue, we have grown by 2.6% or almost 10 million euros. Biggest contributors is, of course, food segment, which provided additionally 16 million euros. Out of that, 11 is poultry and 5 is ready to eat and instant food categories. As well, in terms of value in euros, we have traded less in our partners to farmers segment. So how does our gross profit look then? It's really looking fantastic. For the first 3 months, we have inked 56 million euros of gross profit, and that stands out in the last 4 years. The share between food and partners for farmers remains as well very healthy, 42 and 53%. So year on year, the gross profit increased by 27% almost, or almost 12 million euros. And biggest contributors are partners for farmers, plus 7 million euros. That mainly comes from grain trade, and of course, a food segment, which provided another 3 million euros, and that's mostly coming from poultry. You can notice that we have record high gross profit margin for the first 3 months, 14.2 million euros versus last year, 11.5. Gross profit actually increased through all the segments except food. Food remained quite flat. Because apart from very good poultry results, we have somewhat decreasing profitability in our instant foods and ready-to-eat food segments. However, I would like to notice as well, our first quarter usually is the best in terms of profitability. You can see that actually historically. So it evens out during the year. So it's due to the seasonality, as we have quite intensive trade and sale of inputs to farmers and farming as well. So looking to our operating profit, we have another beautiful number, which is 27 million euros of operating profit for the first quarter of this financial year. The share is also very balanced, 50-50%, almost coming from two main segments. EBITDA grew by 43%, almost. The biggest contributor is Partners for Farmers, 4.5 million euros, and then food segment by 2.5 million euros. If you if we look to the profitability, 6.8% EBIT margin, again, one of the best in the last 4 years. We have much more above our strategic target of 3%. So again, it really indicates that we had an extraordinary successful quarter. So how did our segments perform? And one of our best performing segments this quarter is Partners for Farmers. It had a really good quarter in terms of sales. We have actually delivered less sales revenue in terms of euros. However, we traded more in terms of volume. Even though we had less inputs and less feed, we have actually offset that by better trade in grains and especially wheat. So in terms of profitability, we have really a successful quarter in terms of our elevators, 9 million euros gross profit. That's a really good result, and that's mainly resulted from higher quantities. We had a really large grain or bumper crop in Lithuania, so we had more quantities coming into our elevators. And out of that, actually, out of that also was very big impact by our newest acquisition, Alagro Trade in Latvia. We have standalone in Latvia bought more 117,000 tons of grain than we did previous year. So that's actually 15% of our total grain purchase. However, gross profit profitability, we have a little bit lower. We had more cost on our side, and that's why it was actually squeezed. So that came basically from volumes. So big harvest also resulted in good trading volumes and good trading activity in our grain segment. We have 6 million euros in gross profit versus 1 million last year. However, the forecast or the looking forward, it still remains quite volatile. The harvest quality throughout the Baltics is not the best, so that remains quite challenging. So going forward for the full outlook of the year, it is very hard to judge how we are going to combine the full year. However, we started quite strong. In terms of feed, we have unfortunately lower gross profit margin coming year on year, but very different stories. Compound feed, we have a healthy demand, healthy production. We did not produce less. We more or less have delivered the same result year on year. However, we have pressure in feedstuffs trade, and the pressure is basically on margins. And we have one profitable position in amino acids, which basically is a result of negative effects of the tariff policy of European Union against China. If we look to inputs, the season started really very difficult. We had a late harvest because the season was very rainy, very humid. So that also impacted our sales of feed, fertilizers, and other micronutrients and plant protection. In terms of seeds, we have a bit lower quantities. However, we have remained with the same profitability. Fertilizers remain a trade which is still, we will still have to see how it goes, because of course the application of fertilizers is not that favorable for farmers due to the price of grain comparison to fertilizer price. So we will see how that develops. However, we have the carbon border tax coming up from January, which will change pricing for fertilizers coming outside European Union. Machinery, solid recovery, but that was led by very strong EU support program. And that's why we have a really healthy first quarter, 4 million euros of gross profit versus 3 million euros last year, and we have a much better stock situation in the company. Let's go to food production. The driver of the last financial year, still remaining very strong this year. In terms of revenues, we have actually delivered more by 15 million euros. We have 123 million euros this year. That was mainly driven both by poultry and ready-to-eat segments. So in terms of gross profit, we have 24 million euros. We have grown from 21 million euros. But the main driver here is again poultry. We have a bit less satisfying results in our instant and ready-to-eat products, and as well as flour and breadcrumbs. So when we talk about poultry, we have stable production and sales volumes that hasn't increased much. We have still continuously improving broiler prices, so that's favorable dynamics for us, for our main cost component. And we have to maintain very strong focus on biosecurity, because basically the high export prices which we are facing now are mainly driven by all the diseases and influenza in European Union, and that's not given for granted as well. It is already in Lithuania in some cases, so we need to be very cautious on that. So far, we were good to manage that. Looking forward, there is some indications of poultry price downward correction. You can already see that in some indices. However, that's not yet very big. But now we are going to a less favorable seasonal pattern for us. It's winter, when we will have higher costs from heating. So we will see how that will contribute to our cost base and how this winter will look. When talking about instant foods and ready-to-eat foods, so instant food category, we have higher volumes and higher revenues. We have sold more because we are operating a new production plant in Alytus. Ready-to-eat category delivered, unfortunately, lower volumes and lower revenues. One of our main export markets, which is US, has a bit of difficulties regarding the tariffs. It's now quite hard to export that there. We need to work with them how to price and how to pass the tariffs to final consumer, either to have a healthy split. So unfortunately, increase of volumes and sales overall for this segment was led by deteriorating profitability, and the prospects for this segment will highly depend on the ability for us to profitably employ the new production capacity we have both in instant foods factory in Alytus as well as ready-to-eat. Flour more or less remain on the same level. We have lost one key account client, which has actually finished operations in Lithuania, but we have funneled these amounts of flour to our internal production, so that was not a big change for us. However, our new coating system plant in Kėdainiai has started operations, and they are still getting back or not getting back or going on track. And now we have a bit of a challenge with higher quantities versus maybe a bit lower profitability. But looking forward, we see that we can balance the portfolio and come back to the profitability we have seen before in this segment as well. So one of our smaller segments is agricultural production, but one of the most probably interesting ones. So in terms of sales revenue, we have just slightly less than last year. In terms of volumes as well, we have produced a bit less wheat, however, more or less the same amount of milk. So we have harvested everything for 2025. More or less the yields are the same as last year. And but we overall increased the harvest quantities. We have sold around two quarters of our harvest. What we see that the prices are so far really very low, and that was the topic for the last half a year. Unfortunately, We also have a cost pressure. So year on year, we see that our cost has increased per ton around 20 euros. However, we see that we have sown or we have done all the field work after the harvest in due time. It's hard to say how the sowings look. We have quite a lot of humidity, and that was quite late sowing, but so far, we have this grain part under control. Milk production, we have more or less the same herd. Our milk per sales prices are 20% higher if we compare year on year. That's why with the same quantities we have a better result and more or less the same profitability wise. But looking forward, even though the local agricultural statistics look that the milk price has not changed or is not decreasing, we are following the global markets where we see some corrections downward in the main products. However, we are now going from very high product prices to a bit lower, so we will see how the milk price will balance out. But so far, the main driver for profit in this segment is milk. I will go through our ongoing projects, which you probably more or less know, but we are going on and we are pushing forward our investment in biogas in Lukšiai. You can actually see how it looks more or less now. And we are hoping to start operations in the end of second quarter, beginning of third quarter this financial year. We are also expanding our milk production capacity in two of our farms in Žibartoniai and Sidabravas. We are really good with timeline there. We will start opening these facilities in end of this calendar year. And few projects we have postponed. One of that is, which we communicated to you as well, we have for now postponed our biomethane production plant in Kaišiadorys. That was around of the 20 million investment at that time. That is now under review and consideration. And two new projects which we have communicated to you recently, a month ago around, is around combined 90 million investment. But if we look them separately, it's around 20 and 70 million investments. One is in new pet production plant, which we are building and looking at a business plan here. But one of the maybe bigger is the new feed production plant. We have a feed production plant which is now based in Kaunas, just in front of Žalgirio Arena. So this production plant would be a substitution for the one in Kaunas city. We are looking to expand in terms of capacity and, of course, to modernize and build a new factory in a good position somewhere in Lithuania, which then would change the existing one in Kaunas city. So this is what these investments are about. The executive board is considering and building a business plan for this one. When we will have the decisions made, we will of course communicate to the market in one or the other direction. So this is more or less from my side. Please, if you haven't yet, subscribe to our news and you will follow all the latest developments. But rather than that, thank you, and I'm looking forward to your questions.
Thank you very much, Mažvydai, for insightful presentation. Now, indeed, we will move to our Q&A session. And as a reminder, please submit them in writing through the Q&A window or raise your hand to be unmuted. The first question was received in advance and is the following. Please elaborate on grain trade patterns and this segment performance, quality of grains received and market as such.
So market is quite interesting because we have quite high quantities in Lithuania, more or less similar quantities in Estonia and Latvia. However, going from Lithuania north, meaning Latvia, Estonia, we have deteriorating quality of grain. So the quality of grain in Lithuania is not that good as well, but it's a workable condition. We have higher quantities, and that helped us to produce better or result year on year in our elevator network. We have higher, larger quantities. That as well helped for our trading activity in the first 3 months. However, due to the quality issues as well as quite low overall grain price, as there is no big deficit of grain globally, the market going forward remains quite volatile. So we had a first good quarter, but I'm really cautious going forward how the trades will develop later on in the year.
Thank you. The next question received in advance is the following. Could you please clarify what the 53.5 million euros in long-term trade receivables consist of? Additionally, when does the company expect these long-term receivables to be recovered?
So these receivables is our regular business. These receivables are from our farmers. Basically, we have a higher long-term receivable portion during first quarter of the year because we have sold and we usually sell, this is nothing new, to farmers with deferred payment terms longer than a year. It's usually maybe 14 months or 13 months. And when it's above a year, we have to classify them as long-term. But if you would compare and look at our books year after year, the amount changes, but we usually have a part of the amount which is long-term because basically we will receive the payment from the farmers after the harvest, and that's usually after 13 or 14 months when we sold.
Thank you. We received congrats on the flying start to the year from one of the analysts and compliments on the new look for quarterly reports. And the question, in fiscal quarter first, efficient procurement helped reduce trading costs and significantly improve gross profitability in grain and oilseed trading. Could you please elaborate a bit more on that efficient procurement?
Well, basically, first, thank you very much for congratulations, and thank you very much that you have noticed our new look. We put quite a lot of effort that our presentations and reports are user-friendly, so thanks for going that unnoticed. In terms of our trading patterns and efficient purchasing, I would only like to remind you that we usually have very different quarters depending on the price we sell for, also the cost of grains coming into the sales. So I would really like to judge our trading activity in wheat and oilseeds maybe at least after 3 quarters of this year. So far, we have sold quite well. Our purchase price reflects the quality in the market. It's nothing more than that. We are buying according to the quality we receive. But we find trades and profitable trades where that quality of grain is actually needed for specific production, feed production, and others. So let us, maybe be patient and see how we go on, because as I mentioned before, volatility in the market persists. Quality of the grain is issue, and there can be situations where we will have profitable trades due to low quality of grains. But I don't want to speculate going forward because we still have quite a lot of grain which we still have and we need to sell in the future.
Thank you. In fiscal first quarter, the production volumes of the group's poultry companies remain broadly in line with the previous year. Also, purchases from external suppliers declined by 23%. Could you please help us understand what purchases from external suppliers mean? Is that feed?
No, this is basically we have farmers who are breeding and producing broilers. So we are basically breeding broilers ourselves, and we can do that roughly 70 to 80% of our need. The 20 to 30% we need to buy in the market. That's only for Lithuania. So basically, we will have farmers who are producing and breeding live birds. We buy the broilers for them, and then we are using them in our production. So, and this quarter by quarter or every year depends on our capacity, how much we can slaughter, how much we can sell, and it also depends on how much we are breeding ourselves. And depending on that, we are looking how much we need to buy in the market. So basically, this is a function of our production capacity, of our sales capacity, and how much we need to buy or outsource externally.
Thank you. In flour and flour mixes, production volumes were stable. So sales to third parties fell by 28% after a major client's withdrawal. You touched a bit during the presentation, but could you please elaborate a bit more on that client, name, reasons for withdrawal, etc.?
No, I mean I cannot comment on the names and so on, but basically there's it's a bakery which has closed its operations since the Baltic market. They're not operating here anymore. That was not a big problem for us because we can redirect these quantities to our internal production, and that's why the volumes and more or less the profitability and the selling price remained fine in flour segment. I just want to maybe emphasize that it's not we lost the client. The client finished operations in the Baltics.
Okay. Instant food production grew by 20% year to year in the first quarter, while sales rose by 32% year to year. This implies growth in average selling price of roughly 10% year to year. Could you please indicate the reasons behind higher average selling price, if that holds true?
The reason for higher selling price is the mix of our products we sell and produce. Basically, we have produced different kind of noodles for a specific buyer because those noodles are bigger packs. They have a higher selling price. That's why we have overall not only increase in volume as well as increase in sales overall. That depends completely on our product portfolio, which we contract every quarter or half a year or a year because the contract's different in their length. They can be shorter, they can be longer. And if we will remain with that production of that specific product, or we will change that to a similar one so it can remain. If the portfolio will change to lower value products, smaller products, that of course will also impact our revenues in a sense. So that's a function of our product portfolio, which we produce and sell to our clients, and they contract with us.
Thanks a lot. In the first quarter, instant food and ready-to-eat products saw combined gross profit shrink by 53% year to year to 1.9 million euros. Could you please provide a split between the two? Is it right that instant food had better dynamics in gross profitability versus ready-to-eat?
Well, we show the segment as one, so you should treat it as one. As you can see, that's the analytics we provide for the market. Basically, both of those segments did not have a good quarter overall. Maybe a bit different reasons. In ready-to-eat, we have for now lower sales to one of our main previous markets, which was US. And we are actively changing those sales to other ones. In terms of instant foods, which is basically our instant noodle production, we have continuing issues with production for the first quarter. We are solving that out, and they are decreasing in terms of scale. However, that doesn't help us to be profitable in the way we would like to be. That took us longer than we expected, but we are, in a sense, dealing with that as it is.
Thank you. Given the flying start to the year, EBITDA of 36 million euro and lingering tailwinds in poultry, it seems reasonable to expect annual EBITDA above the group's targeted 70 to 90 million euro interval. Would you agree? If not, what could derail the currently sound course?
If we would judge the year by the start, probably you could say that, but we will, as soon as we have that visibility and opinion that we will be above our strategic target, we will issue that in the market and inform the market separately. However, for now, we see quite a lot of volatility going forward and some risks. So some of them are connected with the grain trade as well. As before, the first quarter was very strong, so we have to look to the next quarters how it develops, because the market is not easy in terms of quality, and we still have quite a lot of grain to sell. So that's one of the reasons. The other reason is poultry prices and the coming winter. So far, gas prices are in a good level for us, but we will see how that changes during winter and how cold the winter will be, meaning how much extra cost from heating we will bear. The other thing in poultry is, of course, market prices. Will the market prices remain or start decreasing or change in upward direction? So those are two bigger reasons. The other reason is as well our instant foods and ready-to-eat foods segment. How that will develop. We expect them to start becoming profitable during the year, and that's very important for the overall performance of the group. So I would say these are the main criteria and risks for the group's EBITDA's performance going forward. One of the others is as well feedstuff trade. We have pressure on the margins in feedstuff trade, and as well we have difficult situation with the amino acid trade. As mentioned before, it is a subject now of EU tariffs, and that position for us is not profitable anymore.
You mentioned that you had 2/3 of volumes pre-sold for the 2025 harvest. Was this a profitable decision to you compared to what you could have earned on spot market?
Well, we haven't back traded that, but if you have, I don't know if you follow closely, but for those who don't follow closely, the grain price in the last 4 or 5 months hasn't changed very much. It's more or less fluctuating in low levels. If you look maybe 6 or 7 months ago, it even decreased. And it is lower year on year as well by around 15%. So year on year, it is lower 15%, and we have a bit higher cost on our end. We need to make some sales going forward. We cannot keep the grain for a long time. We have limited capacity to store them, as well as we need working capital, and the projection, for grain price is also very different. And we have made a decision that we continue selling by batches, and we will average out our sale price in the best way for the full year. So our strategy is to average out during this year on the sale price of grain.
Thank you for your answers so far. We have still 5 questions to answer. What's the reason for postponing Kaišiadorys Biomeat and postponement? What is happening in this biogas market currently?
We currently are executing our project in Lukšiai. We decided that we want to finish this project first. We have quite a good learning path, how to manage these projects and what are the main things there. The other reason is that we are also closely following, the biomethane green certificate market, because when you produce green methane gas and sell it to the market, you receive also a green certificate. And currently, it is a very important portion of potential project earnings. So we want to understand the mechanics and the market development there, because the price of green certificate is fluctuating. As if you would treat this project only on the basis of natural gas, which now costs around 30 euros. This project payback term is very long, so it's more of an infrastructure project. And we as a group, we always are aware of our payback times, and we don't have a lot of infrastructure projects. And that's why we don't want to expand our return horizon to this one as well. So we are all waiting all the arguments there. But on the other hand, we have the manure on our hands. So we have the manure coming from our bird production, which we also, it's a good way to transform and earn extra money on and when producing biomethane.
Thank you for your clarification. And the next question regarding US difficulties with tariffs and pricing there. What percent of expected volumes from new production capacities were planned for US market?
None. US market is legacy market. When we bought the soup production plant from Auga, they had already a very big share of their existing sales to US. So we took that over. We were working to expand that. We did not expand them too much. So basically, these are legacy sales to US market and to US partners. So it's not that we are selling none to US, but the quantities have decreased because pricing for us and for them became quite difficult. It doesn't mean that we will not find a way going forward, but in terms of new capacities which we built, none of them were planned to US.
Thank you. How much volumes do you currently have in PFF division's inventories that are not contracted and have to be sold in coming quarters?
All the production, more or less, by high percentage, we produce as contracted, so we don't keep stock. The stock we have is only, a buffer stock, maybe some stock of our own brand, Sunyan. But rather than that, the majority, most majority, 90% of our production in instant foods is produced when contracted. So we don't produce to the warehouse, we produce to specific partner, specific client, specific taste, for a specific label, and so on. So we don't produce to warehouse our instant foods. We have only small stock of our own brand or buffer stock for rollovers.
Thank you. We received also one question about the shares. When share buyback program will be activated?
That's a very good question. Thank you very much. We will be very open with our share buybacks. We will communicate that to the market. We are now working on the strategy, and as soon as we decide how we go forward and make the decision, we will communicate as much as we can promptly to the market, and you will be informed.
And the last one is like a recommendation or idea for you. You have mentioned that the poultry quantities are stable. Are you planning to expand in this category if it is as profitable?
If profitability continues, but overall, if we see that the market balance is healthy, we do not want to make any short-term decisions based on the disease situation in Europe, of course, we see that the return on investments in poultry are very good. So logically, that's the area where we would like to invest and expand.
Okay, thank you very much. It appears we've successfully addressed all of your questions. So on behalf of both Akola Group and Nasdaq Vilnius, I want to extend our gratitude to everyone who joined us today. Thank you, Mažvydas, for sharing such a comprehensive insights into Akola Group performance. Your experience and transparency are truly appreciated. To our attendees, thank you for your engaging questions and active participation. It's been a pleasure having you with us today. And as mentioned earlier, the full recording of today's session will be available on the Nasdaq Baltic YouTube channel. We will look forward to connecting with you again at future investor events. Until then, have a wonderful day and thank you once again for your time and attention.
Thank you very much, everyone. Goodbye.